It's become more expensive to buy a house in Texas, and renting is a logical choice for many households. I'm Daniel Oney with the Texas Real Estate Research Center at Texas A&M University, and I've been looking into the role of rental markets in the broader housing ecosystem. While home ownership is still part of the American dream, 4 million Texas households rent. For some, renting is a temporary stop on the way to owning a home. For others, by necessity or by choice, renting is the long-term reality. Even though monthly rental expenses are lower than monthly ownership expenses, renting can still be a challenge. A common rule of thumb is that housing should consume no more than 30% of your household income. In Texas, 53% of renters pay more than that. El Paso has the highest share of cost-challenged renters at 57%, while even Austin, which has the lowest share, still sees 50% of its renters struggle with affordability. The decision to rent is influenced by many factors. For instance, rural households are less likely to rent, as are higher income households. The rent versus own decision is also influenced by stage of life, lifestyle, and other broad economic conditions. The interaction of household types and income plays a major role in deciding to rent. For instance, couples are less likely to rent, whether they have children or not. Single parents and non-family households, such as roommates or single people, are much more likely to rent than the average Texas household. These make sense when we consider that couples often represent two adult incomes compared to just one for single parents. Likewise, many non-family households tend to be younger people or single elderly with limited income. Even though these rental patterns are relatively stable, we've seen some interesting trends in recent years. First, there's been a notable shift from renting to owning by families with children. This is true for couples and single parents. I think this was partly from households taking advantage of extremely low interest rates during and after the pandemic. At the same time, we saw more couples without children shift into renting. Aging baby boomers choosing to downsize may be playing a role here. Our final household category, the non-families, shifted further into renting. This may reflect gradual worsening inflation and poor job market prospects. There's been a lot of discussion lately on how institutional investors may be changing housing markets. It's hard to precisely measure the role of big investors like publicly traded companies, but these firms are more active when interest rates are low. The research conducted nationally also points to benefits from big investors, such as stabilizing falling home prices after the financial crisis and upgrading older rental properties. At the same time, since they have big pockets and favorable financing, big firms can pay cash or outbid households in the for-sale market. Likewise, the concentration of institutional activity can raise rents in neighborhoods that used to be affordable. We'll be taking a closer look at big investor activity later this year. To learn more about the role of renting in Texas, take a look at my article in the summer edition of Tierra Grande and on our website.